Welcome back. Still tuned into Midcap Radar on CNBC TV 18. Well, Cigniti Tech is the stock on our radar. Company's Q4 performance took a hit as revenue came under slight pressure, with some projects being put on hold. Budget cuts also dragged down its numbers. However, we are done with Q1 to understand what the demand trends really look like and what's happening in the IT industry as a whole. Let's discuss this and more. We are joined by Krishnan Venkatachari, who is the CFO at Cigniti Technology. Good afternoon. Thank you so much for joining us. Well, as we were pointing out, Q4 did see some project ramp downs which led to a revenue decline. What has the trend been like in Q1? Have you seen those clients come back? Have you seen new client wins as well? And do you expect this trend to continue for a couple of quarters?
Good afternoon, and thank you for hosting me today. Just a word of caution, basically, we have started on the quiet period invariably, so I'll be able to talk on the business outlook in generic, but in terms of the numbers, I'll be very cautious in terms of putting it through, basically. And if you look at the last year has been a good year in terms of the last quarter, probably, yes, we had a couple of pushbacks in terms of the clients, though there has been a good set of clients which we have won. We are cautiously optimistic in the first 2 quarters as it comes, basically, because what we have seen during the Q1 has been the client spending has been very cautious. And we see this trend continuing for this quarter and next quarter, and we expect the soft signals which has come through, probably effective September, October is what the spending in a splurge to commence, basically, we expect.
You're saying client spending has been very cautious in Q1, similar to what we had seen even in the month of March, right? There is no improvement in terms of the client. Okay.
No, we have not seen a huge improvement in the client spending in a bigger way during this quarter. Yes.
Okay. So which industries are seeing this, increased level of caution? If you could, tell us that. And what about the projects which were put on hold, in the month of February and March? Have they restarted or they continue to be put on hold? And when do you expect that to restart?
Sure, good question. It's a combination. And if you look at the sectors on the retail and BFSI, we see the cautiousness in terms of spending. However, on the medtech, what we call, and on the healthcare and the travel, probably we are seeing optimism in terms of spending, in terms of what you call the new businesses and the growth. If you look at in terms of the deferrals, what we have done, we have, in our case, probably is that whatever deferrals have taken place clearly, I think about 60% of that, probably we commenced it somewhere around June, and the rest have been deferred for the next quarter in terms of trying to get the commencement. We are trying to work around on the commencement date, which could be any time soon. Yeah.
Okay, so client spending has been a little cautious in Q1. How has that impacted pricing? Because in Q4, you did see price increase in more than 50% of the revenue build accounts. You spoke about some sectors not doing so well or being cautious in spending. How has it impacted pricing in different segments?
Fortunately, I think we have not seen a pricing pressure at all. I'm categorical on that, saying that we have not gone for any kind of a downward revision in pricing. The pricing pressure has not come. We have not witnessed any kind of a pricing pressure. We only have witnessed in terms of deferral of spending clearly by the clients. Yeah.
Okay. So you're quite confident. You sound quite confident that clients will come back and spend in a big way. There is going to be pent-up spending come Q3, October onwards. What gives you that confidence?
I think it's a continuous discussion with the business and what you call the on-site delivery and the business and to the clients, what we do in the management side. When we keep on a continuous discussions with the CIOs and the kind of decision makers, we get very clearly, and few of them have also signaled out very clearly to commence works from September. Few of them have said that we'll come back to you because they seem to be confident that they have their own set of budgets coming through and which has to be exhausted and things like that. So it's just basically based on discussions, clearly.
And just one more, question back on that project deferrals. You said 60% has already commenced, and you are in conversation to restart the balance. Are there any projects which are not going to be restarted? They've been permanently shelved or cancelled?
We have, at least in our case, we have not come across something which has been permanently shelved. And we are fortunate, yeah.
Okay. All right. So the other positive thing in your guidance has been the margin expansion that you've spoken about, 150 to 200 basis points in FY24. What will lead to this? Because we are also talking about wage hikes. How much of an impact will that have on margins?
We have gone ahead and did a wage revision about close to 9% this April. And 9% is more or less slightly above the inflation is what we have done in terms of retention, and which is essential, which will marginally impact in Q1 what we feel, because as we start looking at in terms of moving out the needle on the volume growth which is coming through, it will get neutralized. So it will be very minuscule. As regards improvement of the margin, I think it's a continuous exercise. And we as a company, if you have seen the years before also, comparing to previous year, we have moved up on a neutralized basis or a normalized basis of the previous year, though it was reported at about 10.2, but we were there removing the one-off expenditure at about close to 12.5 to 13% or so, where we have moved up the needle by about 1.5 basis point to 14.4% in the current year in terms of the EBITDA, that is out 23 March. So year on year, if you look at it 23 to 24, yes, we are expecting a positive move. But I think we'll reassess and come back as we declare the quarterly numbers as to where it will be. And we should be able to give a correct guidance at that point of time. Yeah.
I think last time, sir, you spoke about a 150 to 200 basis points margin improvement.
Yes. And when the headwinds were not expected beyond a level, when we have seen these headwinds, we are recalculating everything and we'll come back on that.
Okay. So margins will improve, but may not be to the extent of 150 to 200 basis points that you had earlier anticipated.
Precisely.
Okay. Sir, have you implemented the wage hike in April? And if yes, what's been the overall quantum of increases? Just want to understand if the industry this time is going to be giving less to the employees, considering the last 2 years have been quite good, and now we are facing the supply side easing pressure.
Yeah, we have given a push on the digital side invariably with the digital push coming through, and then with the retention of people, and especially when we are getting into the DevOps side comparing to the testing alone, I think it was essential for us to retain the employees. So we have gone ahead on a gross level at about close to 9% on the pay side is the total increase which we have provided on the wage bill, clearly.
Okay. All right, Mr. Venkatachari, it was a pleasure speaking with you. Thank you so much for joining us. That's the word coming in from Cigniti Tech. No pressure on pricing, and there's some deferral as far as the client ramp-up is concerned. And margin guidance is something that they will take a relook at. We'll slip into a short break.